Howdy, everybody. Welcome to Liberty Call. Today is Tuesday, July 8th, 2025. Hope you're having a fantastical day out there in the interwebs. It is sunny and a little warm here today in Colorado and kind of humid. Even though the humidity says it's low, feels kind of sticky outside. So anyways, markets wobbled as Trump dangled a new round of tariffs on 14 nations, then hit pause. The Dow dipped slightly while the NASDAQ eked out gains barely, as investors weighed trade drama against hopes for Fed relief. Copper and gold surged on tariff threats and safe haven demand, with the Fed minutes and consumer credit data looming, Wall Street's walking a tightrope between policy risk and market momentum. So before we break all the news down today, I need some help from you. Give me some thumbs up, a like, a share, subscribe, a follow, and press the notification bell. All right, let's get to the markets for today. Dow Jones was down 0.37%, 165 points, closed at 44,240. S&P 500 down 0.074 points, closed at 6225. NASDAQ up 0.035 points, closed at 2418. The VIX was down 5.51% today. Closed at 1681. Canada down 0.43. Brazil down 0.14. And Mexico down 0.42. Going over to Europe, Germany is up 0.5%. The UK up 0.54. France up 0.56. The Netherlands up 0.3. Spain was up 0.03%. Italy up 0.67. Switzerland up 0.08. And Portugal up 0.01. Russian exchanges were split today. The MOX down 0.04. RTSI up 0.67. And the overnight markets, the Nikkei in Japan was up 0.26%, Australia up 0.02%, New Zealand up 0.11%. In China, the Shanghai up 0.7%, Shenzhen Component up 1.47%, China A50 up 0.42%, DJ Shanghai up 0.76%, Hang Seng up 1.09%, and the Taiwan weighted was down 0.53% when it closed on the 7th. All right. So that is everything there. Good stuff, I know. Let's jump into the market recap, see what happened today. SP 500 flat as Trump says no further extensions on August 1st tariffs. Well, until tomorrow when he changes his mind again. All right, the SP 500 traded sideways on Tuesday as investors weighed the economic implications of President Donald Trump's escalating tariff strategy. Trump confirmed that extensions will be granted beyond the, Trump confirmed that no extensions will be granted beyond the new August 1st deadline for reciprocal tariffs, reigniting trade war concerns. Letters released Monday outlined steep new tariffs, 25% on imports from South Korea, Japan, Malaysia, and Kazakhstan, 30% on South Africa, 32% on Indonesia, 35% on Bangladesh, and 36% on Thailand. Notably, India and the EU were not included, suggesting potential deals may be near. Analysts noted that announcements added $54 billion in projected annual tariff revenue, but failed to remove uncertainty. Wow, whole $54 billion. That'll really make a huge dent in the $37 trillion that we have currently on the books right now as far as federal debt. Oh, where was I? While no immediate policy shifts took effect, the tone signaled signaled a more hawkish stance. Wolf Research suggested investors may be reassured by Trump's apparent desire to avoid market chaos, but the underlying trajectory of trade policy remains aggressive. In corporate news, Amazon launched its extended 4-day Prime Day event. I just ordered a new smoker for myself, so don't tell my wife. Last year, the shopping holiday drove $14.2 billion in U.S. consumer spending, and analysts expect another strong showing. SoFi Technologies hit a new record high after expanding into alternative investments, including access to private companies in AI and space tech. Meanwhile, Hershey declined after disappointing Hershey declined after appointing Wendy's executive Kirk Tanner to replace longtime CEO Michelle Buck starting on August 18th. Economic data releases were sparse, with investors turning their attention to Wednesday's release of the Federal Reserve's June meeting minutes. The Fed has reiterated its intention to keep interest rates steady until it better understands the inflationary impact of Trump's tariff policies. Overall, the day's developments reinforce lingering trade uncertainty while keeping financial markets cautious ahead of key Fed guidance. Investors continue to parse Trump's tactics for clues about potential market volatility and economic direction in the months ahead. Yeah, well, I don't know if they really have a plan other than just you know putting numbers out there and hoping that someone bends to their will. All right, well, let's get to the next article here, also from investing.com. Consumer credit falls short of expectations, drops to $5.1 billion. Okay. The latest consumer credit report revealed a significant drop in outstanding consumer credit, with the figure coming in at just 5.1 billion, far below the forecasted 10.4 billion, and a sharp decline from previous month's 17.87 billion. This dramatic slowdown signals waning consumer spending and confidence, both of which are critical components of economic growth. Consumer credit is a key for the financial health of households and their willingness to take on debt for purchases like cars, appliances, or tuition. A higher than expected reading typically reflects strong consumer sentiment and can boost the US dollar. Conversely, a lower figure like the one reported often suggests caution among consumers and maybe bearish for the US dollar. The sudden contraction may indicate growing uncertainty in the economic environment, potentially tied to elevated borrowing costs, inflation concerns, and geopolitical instability. While the impact on the dollar may be muted in the short term, such data could influence broader economic trends if the slowdown persists. However, because consumer credit numbers are often volatile and subject to revisions, analysts will look to future reports and related indicators for a clearer picture. Until then, the report adds another note of caution to the economic outlook for the second half of this year. All right. And we got one more to cover for today. This comes from Zero Hedge. Oil markets are tighter than they look. And this was written by Mr. Neil Crosby via oilprice.com. So let's see what Neil has to say. The global oil market is undergoing a period of heightened volatility and structural change, where traditional indicators like diesel spreads and refinery margins are no longer reliable predictors of demand. Recent disruptions, such as extreme weather, ongoing supply chain issues, and refinery shutdowns in the West, are distorting short-term signals and contributing to regional imbalances, even as headline figures remain weak. Diesel spreads, once seen as dependable indicators of economic activity, have recently failed to reflect medium-term demand due to unusual weather events and logistical bottlenecks. Meanwhile, refinery margins remain strong, suggesting robust refining activities, even as diesel cracks have softened. Refinery closures in the U.S. and Europe, totaling hundreds of thousands of barrels per day, are expected to create tighter supply conditions, particularly in distillate markets. The impact of these closures may take time to fully materialize as investors act as a buffer, but tightening should become more evident as stockpiles draw down. Emerging trends also reshaping global refining dynamics. China's new refining capacity has focused more on petrochemicals than fuels, while India is stepping up as a growing refining power. Still, these shifts may not fully compensate for capacity losses elsewhere. Geopolitical risks, including U.S. sanctions on Iran and Venezuela, and tensions in the Red Sea, add further complexity. Additionally, the missing barrel phenomenon, where actual market tightness isn't reflected in official supply-demand data, continues to challenge analysts. Ultimately, despite bear sentiment, real-world supply constraints and refinery shortfalls suggest a more bullish outlook for oil in the near term. Traders are increasingly relying on physical indicators like backwardation in the futures market to gauge true market tightness. All right. Well, that is everything that I wanted to cover for today. So if anyone needs to get in touch with me, where do you want to go? DSAFinancialGroup.com. All your financial planning needs can be addressed there. So give me a buzz. I'd be glad to help. Hope everyone out there has a wonderful evening, and I'll talk to everyone again next time. Adios.